All righty, there we go. March 11th, cruising through yet another month already. Man, time is flying by. But welcome everybody to another Water Cooler Wednesday. And as always, I'm joined by Dwayne Gibbs. Dwayne, what's going on?
Hey, good morning.
Good morning. Good morning. So don't forget, this is live every Wednesday morning at this time on Facebook and then rebroadcast a little bit later on both the podcasts and on YouTube. So please, if you go check them out there, do like and subscribe. Do appreciate that. It always helps to build up numbers on that. Everybody, I do appreciate your help with that. More exposure for everybody, and to keep bringing really good content. And that's what we try to do here every week. I have heard from several people over the last couple of months. They enjoy the content. They enjoy the details, they say of all the different people that they might listen to or have heard in the note business. So they really feel, this guy's showing the real stuff. So I appreciate that. And that's why we want to bring you real deals all the time. And that's one of the things I'm going to do for you again today. Because I often say, a lot of times I end up knowing more about the note that I'm looking to buy than the note seller themselves. And I know people kind of give me a side eye look sometime when I say that when they're a little bit more advanced. It's like, how could you possibly know more about the note somebody already owns that's selling versus you doing your research? And I'm telling you, it happens quite often. When people have notes, especially if they have a portfolio, they know less and less about each individual note, especially as time goes on. They're not paying attention if it's not being escrowed. They might not be aware. And we've done case studies on that here where people are like, oh man, I didn't know they weren't paying property taxes. Like,
All
well,
right.
yeah, you should probably check. Oh man, yeah, insurance, I forgot all about that. Oh, I didn't know there was another lien on there. I didn't know the utilities weren't paid. I didn't know that. I didn't know. So there's a lot of things that when you're a note owner, you should stay on top of. But when you sell or finance and you carry back your own paper, believe me, you lose track of that stuff really quick because you're typically on to the next thing. So it's really our position as note investors. You want to be a responsible, smart, safe, and profitable investor. So it makes sense for you to thoroughly research everything. And that's probably one of the biggest skill sets that I'm known for in the industry. And many of the top people replicate my approach to that. But it is so important. Certainly people can get lucky and buy notes and not put the extra effort into it like I do, but a lot of those no longer around, Dwayne, right? I mean,
Yeah.
you don't
Yeah.
see they kind of fade away, and there's a reason for that. So it does make sense to spend a little extra time on due diligence, and what will happen is you'll get better at it and more efficient at it. Now, if you can add in some tools like AI for support for things that you can have running. I do that all the time now, running for demographics and income in the area, all sorts of stuff that it can do is great, but there's still things that you have to do yourself. AI can't do. It can't get on public records and search private documents. It can't get to a lot of those things. So you're still need to get in there and dig around yourself. And it's pretty amazing sometimes what you can discover. Some for the good, some for the bad. And the bad not being awful, but just being bad enough where you go, hey, this isn't this has to be paid. This has to be done. I was looking at one the other day, unpaid property taxes going back to 2023. And I said, "What are we going to do? You going to pay that, or are we going to take that off the price? You got to know that stuff." So the case study I brought to the table for you today, I've blocked out a lot of things because it's an active deal in process. So you'll see some blue blockouts on this if you're watching this on YouTube on full video. And I'm just covering up the names and addresses. That's all it is, and that's pretty obvious. I try to maintain some privacy on those sorts of things. But I think this will illustrate my whole point of doing proper due diligence so that you know more about the deal than the seller does. That also goes along hand in hand with something else that I've said over and over again, which is to master this business, you have to know both the numbers and the story. It's a combination of both of those. If you are just a numbers person, you're going in blind on some of these deals. You got to know the story behind it. If you're just a stories person, don't understand the numbers, well, same thing. So it just makes sense. You have to have a good combination of both to truly go into these things the right way. So cool case study for you here. I'll share my screen and There we go. So I know some of you are just listening to this on the podcast as well, so I'll be as descriptive as possible. This is a note down in South Texas, and it is a mobile home. Nothing wrong with mobile homes at all. They're good. They're good collateral. Certainly, if you've got an older mobile home, that's really old, earlier than 1980, then yeah, that probably doesn't bring a whole lot of value to the equation. But the construction of these things has gone up quite a bit, but it's also affordable housing. So it's the type of loan that we'll see fairly often, because where else can you get a loan on a property, in this case, for about $58,500? You're not going to Bank of America, right? Wells Fargo. You're not going traditional banking. They would not give you the money for that. Number one, the loan is too small. Number two, they're not big fans of the collateral, especially if it's an older manufactured home. So that opens it up to seller financing. And that's really where this loan came from. Okay. So let's see, we've got a deed of trust on here. So this was a loan that an individual owned this property and turned around and sold it with financing. That's where this came from. They've never sold the note since. Okay. So the original guy who owned this land and sold it carried back the financing with the small down payment, actually a pretty decent down payment percentage wise, and just financed it. And he has since passed away. So he's left that to his estate. So certainly his estate, it's highly unlikely that anybody who's inherited this knows what the heck is going on with it. Do you agree, Dwayne? I mean,
Oh, no question.
that's just number one.
Yeah.
Um, a lot of people, they that's what dad's doing or that's what he did, but they have no idea how these things work, what the responsibility is, any of that. So me knowing that right away, and how did I know that right away? I looked at the documents. I saw the estate of, I did the math. I went through public records. I get it. I understand what happened here. They've inherited this, and now they're doing what?
Hmm.
Liquidating it, just like they would liquidate a house or stock or anything else that they inherited. If they want or need the cash now, that's what they are doing. So here you have some people who have inherited this. They don't quite know how it works. They were approached by a note investor about selling this note, and that person is going to make a broker type of fee by just turning around and flipping the note. So there's a couple things going on here. So which is all good as long as I can get it at a good price and risk for myself. So a couple of good things here. The person's been in there since 2019. We call that seasoning. They've been in there a long time. That means I'm going to have a nice payment history that I could examine, and that means a lot. When somebody's there and they're starting to build up equity in this property. The property did sell for $65,000 back in 2019, and the financing was 58. So again, pretty decent size down payment back in 2019, and it appears that they've been paying pretty darn well ever since. Now, again, we'll want to see proof of that as well. The original note was written at 9.5%, but they also created it as a shorter term note. For a smaller note like this, principal and interest is 756 a month. That's good, right? Those are good high payments on a smaller note like this. So a lot of attraction to this note, and we're able to get this at a good discount too. So the seller is asking 23,000 bucks. So this is one that, utilizing my rapid three formula technique on this. As soon as I saw this, I said, this is one I have to investigate. I did a quick investigation and I put an offer in immediately. Okay. That's sometimes, well, that's an advantage when you can move quickly, but thoughtfully. Okay. to go ahead and start to move forward on these where other people are just taking too long to try to do some research. So it is advantage when you have the knowledge, when you have the ability again to move quickly, but also at the same time thoroughly and safely with it. So very quick trip down to public records identified. Oh, sorry, this was not public records. This was from the seller gave me the information because it's a real estate note in this screenshot. Notes are not recorded. So this is directly from the seller. And what's the purpose of me seeing that? Well, I've got to see that it's there, it exists, because I will be getting an allonge of this, an endorsement of this note, and I also want to verify the numbers. So I go through, do the math, and you can see very clearly there's those payments once again, 756.98, because this was set up as a 10-year note, not 30-year, not 20-year, a 10-year note. And a 10-year note has more present value to it because the time frame's shorter, but it also compresses the payments to a higher amount. If this was a 30-year loan, the payments might be $200 a month, and the payout time is longer, bigger discount, that sort of thing. So we like to see a little shorter payback on this, especially if the people prove that they can afford to pay it. Okay, so here's a little screenshot taken right from Google Maps, which I think the imagery was 2025. So you can see it is a mobile home. You can see the skirting on there. There's another picture where you can see the tongue is still there. They've got some plants around it, but you can still see that. So they just backed this bad boy right in and put it on the plot of land. And I got some details of the property there. Zillow has this at about $91,000. I don't think it's worth $91,000. I don't need it to be. We're in it for $23,000. So
Yep.
so I'll look at what
Oh,
that property might be worth. I don't think Zillow's correct in this case, 91, but okay. Got all the details. The manufactured home was built in 2006. So it's older, but it's not like 1980. There's like a cutoff, and Dwayne, I don't know if you remember that number where the standard went up very quickly. The government got involved with these manufactured homes and put in new codes. They have to have this and that and the other. I think it was 80 or 81 where they did that, and that's
yeah, I
why
thought it was further along, like 86.
86 maybe.
I
Okay.
thought so. I could be
Well, we'll
wrong,
we'll
but
say sometime in the 80s. So if you
yeah.
see a manufactured home that's older than that, yeah, the value is really not gonna be there. It's gonna be more in the land in the case. All right, so we got a nice truck in
I
the
mean,
front
sizable
there.
yard.
Yeah, good looking, good sizable yard there. Uh-huh. And then AI. I just ran some demographics. This is Galveston County, Texas, Southern Texas, and this area has a smaller population. Median age is around 45. Median household income, pretty good, 75 to 76,000. I say pretty good because if that's a medium, the person making a medium income in that area could absolutely afford this property. There's no question about that. And they got poverty rate here at 8.52%. But when I ran another specific study on the job market, you can see that the employment rate is 97, 98%. So low unemployment in that area, which I like. And
Hmm.
if you're not familiar with Galveston, oil should come to mind. This area has a lot of construction type of jobs, manufacturing, that sort of thing. Some involving the oil industry. So a lot of people are well paid, work hard, and absolutely can afford something like this. As of 2023, workforce around this, that, and the other. And again, it's a little dated on that material, but again, the AI searches what most recent information they can find. Average annual salary about 50,000 bucks, aligning to this area. Blah, blah, blah. So I just wanted to get a good idea of what's going on there. Are people moving in, people moving out? How much money do they make? What industries do they have? And I ran a lot more than this. I just tried to take a little snippet of what that might look like because I was trying to build a profile of who's this borrower without knowing the borrower. And
Mm.
when you have a smaller total residence like that, I think you can come pretty close to a good conclusion of this person's probably, you add that in with the truck and everything else, you start to go, okay, this person's probably in this particular industry. That means they're making about this. They might work for these handful of companies, and that sort of thing. Turns out, I believe this guy is self-employed and works on homes and stuff with a gutter business, that sort of thing, and probably does some side work as well. So building a profile, why would I do that? I'm just trying to figure out is this person going
Sure.
to stay and pay, or do they have the ability? It's
Yeah.
really all it is, right? Smart way to do it when it takes you, you know. Uh, I just love showing live examples of the AI, when you prompt it the right way and it's just like thinking for a second and then boom, here you go, right? Here's all your information. It's pretty crazy. So
I Go
go
ahead.
ahead. Go
No,
ahead.
I would say that, you know, if you have a seasoned person watching this and just to go back to what you were initially saying, why is this important? And I think it's so important because you don't know everything that's going on a lot of these deals. And so doing your due diligence and your homework just solidifies, hey, that I want to make sure that this deal doesn't go bad. I want to make sure that all my ducks are in a row. And there, as you know, we trained a lot of people that were shoot ready aim people, and they didn't have their ducks in a row. Then they came back later on saying, "Oh, I really should have vetted this a lot better, and I didn't." But if you get in the habit of doing what you're doing and what you educate your students on, and you work with them on, I mean, it's lesser and lesser all the time of a deal coming back on you. Now, you can't predict future, somebody losing their job, catastrophe happens, whatever. But for the most part, on paper, it shows that everything lines up and that's a good deal. I mean, it's something that more people should do because we hear all the time, oh, I didn't do the deal right. Well, why? Well, I didn't set up my due diligence properly.
Yeah, and it's an exercise of probability when you think about it. We're
Right.
buying a long-term income stream here, and we're trying to predict the future. As you said, we can't do that perfectly, but we can deal in probability. And that can become almost really like a mathematical equation where we start to take what's more likely than less likely to happen in the future. And it just makes
Mm.
absolute sense to do that because you don't want to tilt to most likely is this person's going to default again and I'm going to have to foreclose and go through all this and it's going to cost me more money. Now there's a market for that sort of stuff, but you got to be prepared for that and put numbers in it. But if you're looking at a performing note and you want that thing to continue to perform, it makes sense to do an exercise in simple probability. And that starts with what is this person all about? What's the property all about? What's their track record been? And as everything stays pretty similar in their life without a life-changing event, they're going to continue on the same pattern. That's what we're looking here. So what Drain's referencing is we can't control somebody passing away, losing a job, getting relocated, something something like that. We can't project, but there's a higher probability of things continuing to go on the same path in this case than there is for it to go the other way. And that makes sense as an investor to go, okay, the odds are in my favor it's going to do this. I'm still prepared for worst case scenario because worst case scenario, we still have a property that's probably worth 60, $70,000 and we're in it for 20, so
Mm.
we've got that backup, so we've got worst case scenario handled and then we've got our probability of what's going to happen in the future on this one. Okay, now, so what I can't do, at least yet, go to the county office and enter data to get what's really going on in real time with things like their property taxes.
Yet.
So this is in Galveston County, right, as we talked about. So what I noticed right away when I searched this address, there's two things at this address. There's the land and there's the mobile home. Okay, so you can see the 2006 mobile home from TL Industries, 14 by 61 is the measurements on this thing. That has a separate tax from the actual lot. And this is two lots, actually. You notice there was a larger lot there. So it's lot 37 and 38.
Hmm.
Okay, why are there two taxes? Could only be one of two things. There's two possibilities here. One is that the mobile home is not registered as real property, it's still personal property. meaning it's separate from the land. Okay. The other is in this county, they require it to be separated. Now, I haven't seen that in any county where they require it to be separated. In fact, what most people do is when they get a mobile home, which is considered a vehicle at the time of purchase, they put it on the land, they take off the tongue, they take off the wheels, they put up the skirting, and then they apply at the county to convert that from personal property, like a vehicle, to a fixture, a permanent fixture on the property, which would make it now a part of the real property.
Hmm.
When that is done and the manufactured home goes from personal property to real property, it becomes collateral for the whole loan. So, item number one here is now hang on a minute. What's my collateral? Is it just the land or is it the mobile home and the land? Because this would indicate to me I'm looking at probably just the land.
Hmm.
He could have, in other words, the borrower could have bought this land and then put their own mobile home on there and never converted it to real property. Therefore, it's still theirs. And if they stop making the payments on the loan, they can take that mobile home and move it because it's not collateral on this. They didn't pledge it, right? When you get a mortgage, or in this case, a deed of trust, you're pledging something as collateral. Well, this just tells me odds are they're not. Okay, that's step one. That mobile home is separate. Okay, so further investigation, it's being taxed separately. Let's see how they've been paying on this. Well, they got back taxes from 2021.
Ah,
The taxes are small, but they haven't paid taxes at least since 2021.
and it looks like it's not been, from what I see here, it's consistently every single year. So it's not like they paid one year and then missed another year.
There was never escrow set up for this deal.
That's right.
So the borrowers are responsible to pay their own taxes and insurance. See,
I
no
bet
escrow.
you they didn't understand that.
2019, they got this, and I'm sure at 2019 the property taxes were paid. That puts us into 2020. I don't know what happened in 2020, but after that, you're right. They just weren't paying. So is
Hmm.
that simply out of the fact that they don't know they're supposed to pay that, um, or what? This is just on the mobile home. Okay, so
Mm.
again, it's a small curable amount of money, but
Hmm.
why should I pay that? And they're accruing interest. I mean, continually.
Oh yeah. Yeah.
So why should I pay that? And are we running the risk of this going into a tax sale? And the answer is, well, no, I shouldn't have to pay it. So they can either take it off the price, pardon me, or they could cure it. And you're right. I think there's a probability that the borrowers just don't know they're supposed to pay it. They
I
think,
just think there could have been a misunderstanding.
well, a lot of people think, well, I made my mortgage payment. Don't mortgage payments pay the taxes and insurance? Well, most of the time they do because it's principal, interest, taxes, and insurance. This one wasn't set up with taxes and insurance. This is principal and interest only. But their perception might be, oh, well, I'm making my mortgage payment, so that must be paid. No, it has not. All right, what about the land? So the land, by the way, I put the assessed value for taxes. They're showing the manufactured home being assessed at $11,000, the land being assessed at 59.
Hmm.
Which again, if the land's assessed for taxes at 59, it's probably worth a little bit more than that.
Yeah.
So let's say it's worth, and I'm just going to round it up to 60. I mean, it might be worth more than that. But if it's worth 60, just the land, and I'm still only in this note for 20, I'm still good. So that whole issue of is that manufactured home a part of it or not is almost well, I'd rather it would be, but at the same time, at the
You,
end of the day, if this guy decides, hey, I'm packing up, I'm moving, I'm not paying anymore, and he takes the mobile home and scoots out of town, I still got that land, and the land's being assessed for 60,000 bucks just on that. Okay. So issue to be noticed and then or noted, and then I will follow up with the note seller to see what the scoop is. But you can see this one totals a bit higher, but same thing. Haven't paid since 2021.
Mm.
So yeah, I'm leaning towards Dwayne's theory there, which is that I don't think they know. Okay, so that's one part of the research online, and then I always look too at the mapping and that sort of thing, and I thought this was interesting here. Oh, I thought I animated that. I didn't. So just look at the left-hand side. I'll describe it for those who are just listening here. So on the mapping in GIS, you geolocate where this property is located, and you can click on that and see who the owners are for verification and everything else. So I like to explore around a little bit on that and see, sometimes I'm thinking, okay, worst case scenario, I take this back. Is there somebody who owns like three or four of these lots on that same street? Because if I need to sell this right away, guess who I'm going to go to? The guy who already owns three or four lots on this. I'm sure they'd like to pick up
Mm.
another one, that sort of thing. So what I found on this, on the left-hand side of the screen, I'm showing everybody who's just listening, are lots 37 and 38. That's where the home in that side lot is. Okay. And that is owned, I've got it blocked out here, but that is owned by the proper people. So that is absolutely the lot. When I clicked on this strip of land next door, which is lots 39 and half of lot 40, whoops, it's also owned now by the same borrower who owns the land with the mobile home.
Mm.
And so I further explored that and I said, well, that's interesting. So they bought this land with the mobile home, let's say, and then they bought the land next door. Again, is that what's that an indication of? They want to stay. And they bought it 2 years after they bought the land with the mobile home. That's an indicator. For that's something where I go, huh, okay, they're putting down roots a little bit here. Didn't know that, right? But that's a nice little tidbit to know. So I looked up the public records and verified that. Said, sure enough, in 2019, they bought the lots 37 and 38. You can see that on your screen there on the bottom. They got the deed, the title to that property. And 2021, they got lots 39 and half of lot 40 right next door from the same note seller. Does the estate know that? Or does the estate have a bunch of paperwork on stuff that this guy owns and didn't put two and two together? That's a good question because when you look at this from a different angle, when I look at this property from a different angle, so the other one was from the other side, Dwayne, and now it's coming from the
Yeah.
left side of it. Look at
Hmm.
that. Okay. So that's that vacant lot. That's 39 and half of 40 right here.
Yeah.
Two separate deeds, though. Okay. Two separate notes, two
You know,
separate
and
deeds, two separate
sorry.
deeds of trust. Go ahead.
No, and to your point, I mean, it's not junky. You can tell they must sit outside, probably hardworking people.
Hmm.
The lawn's taken care of. I mean, their grass is green. It's not all
Hmm.
burnt up. It's taken care of. There's nothing thrown all around. So to your point, laying down the roots and being prideful of what they have, I just think there's a mix up somewhere.
On the taxes?
Yeah,
Yeah. Yeah, for sure. I don't think they would intentionally not pay that and run the risk of losing what they've built up here. You're right.
that's correct. Yeah,
You're right.
that's my opinion. I don't,
Yeah.
you know,
Yep.
you'll unveil the rest of the story, I'm sure.
Yeah. So, well, now because this is a live deal, if you will, I kick back to the guy who brought me this note, which again, he probably has no idea that there's this other lot that they own and it's from the same person. So I kicked back to him. I said, hey, here's what I found. See if they want to sell the note on the vacant lot as well. Because again, the estate people may not know what the heck's going on. They just see a bunch of different notes. They didn't put two and two together.
Hmm.
Okay. Now, I've looked at the legal descriptions as well. So, in all these deeds of trust and those sorts of things, the legal description, if the mobile home is included, is normally written in there and including 2006 bop, 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 manufactured by mobile home. This doesn't have that on any of it. It just has the lot, which
Hmm.
again, I'm more inclined to think the manufactured home is separate. That's personal property that is not attached to this particular note. I'd like it to be, um, but again, I can't force them to do that. If that wasn't arranged that way to begin with, I can't force them to do that. I could suggest to them after I own it that they could convert that to real property. It would make sense to them because they could have more tax write-offs and that sort of thing. But they may not want to do that, and that's fine if that land is truly worth, just lots 37 and 38 $60,000. If this other lot is worth half of that, let's say it's a lot and a half, but I'll just say half, another 30,000, maybe 40,000 bucks. That's a pretty good piece of collateral right there. And if these folks were to up and move and take the mobile home, fine. If they left the mobile home, great. I'll buy it from them, and then I could turn around and sell it. Now, I don't see that worst case scenario happening here. It looks like these people are building something to stay, you know, um,
Hmm.
based on this prima facie evidence here. That's what it looks like to me. Price on this one, 15.7% yield.
Hmm.
So if you invest $23,000, you're getting 39 payments of $756.98. That equates to 15.7% interest per year
Hmm.
on a $23,000 investment. Safe because of the value just in the land alone. We're paying a little bit higher, 92% investment to balance. I've shown a lot of case studies on this where we're in the 80 percentiles when it comes to investment to balance, but you got to take things into context. I'll pay up to 96% sometimes on investment to balance if it's the right deal. I'm not going to pay 100%. Extremely, extremely rare if I do that, and it's always some kind of discount. So that's where we are on this one. So it comes to that next phase. You said the end of the story here. Don't know the end of this story yet, right? Because I just kicked back the information over to the note seller to find out. So part of this business is that same thing that I repeat again all the time, which is gather information, organize it, analyze it, make a decision. So I did that very quickly. My decision was to make an offer on this. The offer was accepted. Great. Let me gather more information. Let me organize that. Let me make another decision. And that decision is I'm going to continue to pursue this deal, and I'm okay with the value of the land. I will verify that information. I like the story behind it. I like the numbers, the pay history behind it. But I'm still doing what? Gathering more information. Is there something else here I need? The only stickler on this one is the property taxes, but that's solvable. So either they take out, what is it, a couple grand?
Hmm.
One was 400, one was 18. Yeah, it's about 23, 2,400 bucks. I'd either take that off the price and I'll pay it and cure that, or we can send a notification out to them just saying, hey, by the way, you may not be aware of this, but you got to pay your property taxes. It also
Yeah.
probably tells me if they're not paying that they probably don't have insurance or are paying for that either. That would be my guess. Yeah, if you're not familiar
I
with
think it's a fail
Galveston,
of communication.
yeah,
I think that somebody just didn't inform them whether, the investor guy had too much going on and somebody didn't convey the message. They didn't understand.
yeah.
But I can't imagine that, you know, they're keeping that up. They bought the other partial to it and not paying on it. Um,
So
I just
yeah,
think there's, like
and the
Paul
tax,
Harvey says,
yeah.
the other side of the story.
Yeah. So I'll have to find out about insurance. And again, if you're not familiar with Galveston, you want insurance. Hurricanes do go through there. Um, so I gotta button that up. What I'm hoping is that the person who found this note I hope they go back to the estate and say, hey, there's a lot next door that you guys own as well. Sell that as a package. Go through your paperwork and find that. I would love to come out with two notes on this and have all of that as the collateral for this. I already know that other note was $20,000, and they did that back in 2022, so 2 years after this one. So I already know what that balance is likely to be. So just a little smaller note, but boy, when you add that in as one collateral package, it makes it pretty darn attractive.
Yeah, for sure.
So I'm hoping that's the way it goes. If they sell that part to somebody else, well, that's fine. It'll just have to work its way out. But pretty
Great
interesting.
rate, man. 15.74.
Yeah, yeah, solid,
Yeah.
solid, solid. So that's the discovery, folks. And when you do it that way, again, I just laid out that whole story for you, and that was over the course of maybe 2 days. And the only reason it took 2 days is I just put the offer in. I was waiting to see if the offer was accepted before I go ahead and took a little deeper dive because I got other closings going on. But once I did, it's like, all right, so let's do a full research on this thing, and here we are. So it doesn't take that long if you know how to do it. And you can move quickly, like I said, but also safely, and obviously maximizing your returns, lowering your risk on these things. So it just takes some knowledge and repetition.
I want to clarify. You did not mean 2 days to do the research.
No,
Just want to
no, just
clarify.
yeah. I made the offer and then did nothing, and then the
That's right.
next day they accepted it, and then I spent maybe 20 minutes doing the research.
There you go.
And like I said, 20 minutes, and I guarantee I know more than the people who own this note. It's 100% true equation. 100% true. Because there's
Yeah,
no way, if these people knew about that note, knew about the property taxes, they'd be all over it,
no question.
you know, because it's at risk. So that's how it works. Yep. So that's the kind of stuff that we do over here with real estate without renters. And so if you're looking to expand, looking to learn more, looking to get into the real details of this business, again, I think I bring that to the forefront on all of these with you and show you the real workings behind real deals that we work on in real time. So I work with people personally, one-on-one. That's a game changer. I also have a program, where I partner with people. So we've got all the solutions there. You can go to kevinshortell.com. You can book an appointment right there with Dwayne. Get on the phone and let's talk. Let's get you going. Figure out what your business is, where you want to take it, and see if we're the ones who can take you there. And I would say 99% of the time the answer is yes. So we can do that for you. And Dwayne, you've got appointments and working with people all the time, right?
Oh yeah, absolutely.
Yeah.
Absolutely. I had an appointment with a lady yesterday that you spoke to at a previous event that you had up in Tampa, and
Oh yeah.
had conversation, and more on the list, more on the list.
Excellent. Very
Yep.
good. Okay, everybody. So check it out, please. And again, if you want to see the video portion of this, just pop on YouTube, search my name, Kevin Shortell, Shortle. Look that up, and please subscribe to the channel. Give me a nice rating on that. I do appreciate that. You can also re-listen to the audio only portion on the podcast, Real Estate Without Renters podcast. And please, same thing, like and subscribe to that as well. We appreciate it, and we'll keep bringing you great content like this today, and hopefully be working with you real soon. So thanks again, everybody, for tuning in. Do appreciate it. On behalf of Dwayne and I, we'll see you next Wednesday.
See ya.